Moving on, China expanded at its slowest annual pace since 1990 last year, intensifying the pressure on policymakers to introduce more measures to boost the economy. With the growth figure widely matching expectations, markets here in Korea took the news calmly. But experts say there are still lingering uncertainties. For details, we turn to Hwang Ji-hye.
China grew 6.9% in 2015, marking its weakest annual expansion in a quarter of a century. The slowdown comes as the world's second largest economy moves to a safer and more sustainable growth model focused on domestic consumption over government investment.
The industrial sector saw growth of 27.42 trillion yuan, up 6% from the previous year, and the service sector saw growth of 34.17 trillion yuan, up 8.3% from the previous year.
Chinese slowing growth figures, however, raised investors' hopes for a fresh round of stimulus measures, sending local shares up 3.2%. The latest data were also in line with what most economists have been expecting. Given that, Korea's stock market remained relatively calm following the news from China, with the benchmark index edging up 0.6% on Tuesday. Still, experts are skeptical about whether the current trend will continue, especially in the face of plunging oil prices, which are expected to go lower after international sanctions on Iran were lifted over the weekend.
Local shares will remain jittery, given the lingering worries about crude oil prices falling below the $20 mark.
It was one of the worst beginnings to a year, not just for Korean shares, but global stocks extended their slide into a third week as oil prices slid to a fresh 12-year low. And when will we see the light after this seemingly endless tunnel? Experts say it won't come until sometime during or even after the second quarter. Hwang Ji-hye, Arirang News.